Hey everybody, it's Kimosabi here, giving you another video to continue the saga from what we had yesterday. We were looking for liquidities, and we got some liquidities. Wasn't expecting it on a Friday. I was hoping it wouldn't happen on a Friday. I don't really like the way this closes out on the CME yet, but we'll get into that. This liquidity was taken, so we will remove that, and this liquidity over here, taken. So what happens from here? Well, it's very important that the daily closures remain above, I would say 53.5 is the area that I'm kind of looking at in order to stay above the 50% of the weekly wick that was mentioned in the last video from yesterday. If you haven't watched it, go check it out. Great info in there. One day at a time, and this is the next day. What comes after? So, seeing as this move looks like it's completing like that, so maybe we're going to reaccumulate like that over the weekend. That would make sense before reversing up. Ultimately, I am looking for these liquidities to be taken before any further downside. Stop loss is going to be here as soon as we start to get some higher high closes and higher lows and progressing in an uptrend. You may have a lot of influencers saying buy the dip. Don't be silly. This is a bullish retest of the previous low. I can agree with that, but your stop loss has to be down at this area, down here, down in those wicks. I wouldn't necessarily put a stop loss right there just yet until I start to see higher highs and higher lows and invalidate basically this leg. So I'd like to see it actually get it back above here. I may take a trade, very small position, and then add to it as it goes up. But the method that I trade, I'm not much of a knife catcher. I will buy dips, but I buy dips in an uptrend. Don't necessarily buy dips in a downtrend. So seeing as you have a downtrend ongoing, you need to change that behavior. And the best way to do it from this area would be if it chopped around a little bit, gave you a high and then a low and then a higher high, then you buy dips. Now I want to do something a little bit different, maybe a little bit more advanced in theory, but I'm going to take a volume price of this entire range from the 49,000 low, this entire range right here, and we'll see the volume profile, volume by price. So we have the white line here being the point of control is what it's called. It's kind of the center line where you have the maximum amount of volume, and that's very pertinent for a reason, because that becomes the point at which the most volume is traded. So that would be potentially a bank or a larger player, liquidity provider, somebody that's moving the market. And this entire structure is a market maker special, where it's called a three-phase market cycle, where you have a consolidation, and then you have a break to one side, a break to another side, and then a break to the third side. And that's a three-phase market cycle. 1, 2, 3. So this does complete the market maker cycle. It does look good. Looks like it is completed. And as you can see, after they consolidate a little bit, this does grab maximum liquidity by taking it down, taking it up, and taking it back down. It's just what market makers do to maximize liquidity. I think that's something that you more often would see in the Forex markets. Occasionally I can spot them on crypto and trade them, but you will see them quite often in foreign exchange, where you see a very small consolidation. Usually it's like a small little triangle, and it just gets tighter and tighter, and that's your bank that is positioning himself in order to do the 1, 2, 3 legs of liquidity. So if you want to look into that a little more, it's called the three-phase market maker cycle, if you're interested. It's a little more advanced. I'm not extremely adept at doing it, but I am aware of it, and that's kind of how it's played. You have your maximum amount of volume, and then the expansion happens from there. 3 expansion legs. 1, 2, 3. All right, zooming out to the rest of the range there on the daily chart. Wanted to draw your attention to how the tops and bottoms form in that area, kind of here and here, here and here, here and here. Very rarely do you just get a wick in reverse like that, especially the past 2 years or so on Bitcoin. It doesn't really happen. It kind of changed behavior back in 2021, but what we see here is 2 candles for the bottom, 2 candles for the bottom, a couple of touches at the bottom. You know, the tops have the same thing, a couple of touches, double top there, a couple of touches. It's kind of an accumulation and a distribution, and they hit the liquidity as many times as they have to. So we may see the same thing in our current area here. This may chop around for the rest of the weekend, similar to that, and just kind of double bottom before reversing. If it does want to reverse, it may take out that wick sometime over the weekend. There's low liquidity on the weekend, so you never know what smaller players will do while the larger players are away. So this might chop down. It could break all the way down there. It really can do whatever it wants on a weekend. We could have a short squeeze. That would also happen. You never know. But as for reliable trading, I'm looking for a change in behavior on a 15-minute, 1-hour chart, and that to eventually bleed into the 4-hour chart to start getting some 4-hour higher highs and higher lows. You can start to take trades potentially on a 1-hour to 15-minute, but the prevailing trend on the 4-hour in this downtrend, in this leg down, the 4-hour is still very down. And you will not, from this point, you will not change that behavior until you get a close way up here. So if that was to happen over the weekend, expect a gap fill. There's your higher high. Look for your higher low right there. That would be the trade setup. And stop loss goes there. And any break below that, we know the market maker is looking for this liquidity. Keep that in mind. Price will move to where it wants to go for specific reasons. It doesn't just go for no reason at all. So if this does have the reaction I'm looking for, that stop loss is there for a reason, because any break below there, there's a reason for it breaking down below there. That price is looking for that. That's the reason to do it, is to look for lower liquidity. Sometimes it's just a shakeout in reverse, but then you pay attention to trend and you see if you get a setup to go the other way. This being a fairly decently strong move, it certainly could pick up momentum and just continue down and break the low again. And then we're just repeating the same thing. Low, break the low, break the low. And there's just too much supply, and there's no getting above anything to grab the upper liquidity. Within the range of possibility, the algorithms are still facing down on this time frame. Certainly would be a lot easier if we were to get a higher high close than that, but we don't have that. The last discernible event that we had was a swing low, then a lower high was put in. This can be a higher low before resuming up. If we're contracting a little bit in this area, continue up, or it wants to continue the downtrend, and it's just another lower low, lower high, lower low, lower high, lower low, lower high. We definitely want to see a change in behavior in that regards. Once that behavior does change, we will have the algorithms pushing price up instead. So if you get higher high closes, higher than this, you may have a buy the dip, continue, break above this. I'd say that is a buying opportunity there to grab this liquidity minimum. And then if you hold up here into like another cycle low or something like that, that could be a buy the dip after a reaccumulation at all-time highs or above for continuation. So yeah, don't necessarily rush in unless if you're willing to put your stop loss way down there. That's fine. Or you could stop it out if you make it a little low there. I'd like to buy some strength. I want some strength to come in. Not seeing it yet, and seeing as we're over the weekend, this can just be really funny over here before it wants to pick its direction. Weekly chart here. Going to do another Fibonacci measurement just to remember where we're at. Fibonacci retracement of that wick. And we hit the 50% and went beyond it, but we have not had any closures on a daily below that 50% yet. So I'm inclined to say that's still in the bullish portion of the of that wick. Stay above the 50% mark of that wick, you can still have a bullish posture. Start closing dailies or weekly candles below the 50% of that wick, then it's really pushing into the really strong demand that may no longer be there, and that would be the bearish area of this wick. Zooming into the 1 hour chart, let's see if we see opportunities here. First thing I see is the current leg here matching that. So this could be ABC there, and we're about to continue this leg down into lower lows. Invalidation for that would be the 1618 of this leg up. So that would probably be, if price gets up to 55.5, something like that, and back test the bottom of this, that would invalidate that sell setup. So that would look decent for maybe buying a pullback, maybe at this liquidity down here, maybe into that daily wick that was kind of just made. Get below the daily open a little bit, see what kind of liquidity you can get before pushing up. Start closing candles back inside of this consolidation, and I'd be calling bottoms. So that would look like maybe a potentially this being a wave 1, some kind of wave 2, wave 3, 4, 5 to come back down, and that would be your wave 1, 2 for a larger impulse up. So take it one step at a time. You want to see some bullish price action start. From here, this looks pretty decent. Get back down here, grab this liquidity, break above that. It should have a nice rally up. Not a guarantee, of course. Your stop loss has to go at the low if you do want to try to buy a pullback there. Seeing on the larger time frame charts, like a 4 hour, liquidity was already taken below. So this wick should hold, but seeing as it's the weekend, like I said, this may come down and take out the stop losses there before wanting to go up. It might look really weird, really choppy. It might just consolidate here for an accumulation, which that would look really good for a buy setup. If you end up with a swing failure pattern, something to watch for around this daily open at 53,950. But say you get a consolidation in this area and then swing fail that, that would look really good. That would be my stop loss, because you have a smaller range here and you could really manage risk really tight right there and put your stop right down here. Any break below a stop like that, you're targeting 49,000 and below. So just recorded this real quick to try to get the information out there, trying to get you guys the information. Anybody who's trying to follow along with what these legs are doing, what these waves are doing, where the liquidity is being hunted and why. So hopefully it helps you guys. And if you have any questions, leave them in the comments below. Do your worst.